Welcome everybody. This is the Thursday evening Viper trading webinar. If you're here to learn about trading futures markets using the Viper tools, you are absolutamente in the right place. Tonight's topic is looking for support and resistance and trading accordingly. This is part 1 of a part 2 series. Part 2 will be Saturday morning at 9 o'clock. Support and resistance, of course, are very important to trading, and so we're going to spend quite a bit of time on it. So when we're done, we're all going to be resident experts in support and resistance. But first, we got to knock out our standard disclaimer, so let's take care of that real quick here. All communications from Viper Trading Systems are for educational purposes only. Future trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. All right, well, I'm going to start with something pretty easy. So I think what we should do here, let's get over to an ES chart from today on screen 1, right over here. All right, does everybody see the ES chart from today? ES chart, 4-range chart, Viper indicators. Everybody see it? Cursor and chart moving around here. Everybody see ES? Make sure you see it. Yes? Okay, good. All right, for the brand new folks, let me just take 1 second to orient everybody as to what you're looking at. Some of you might be looking at this for the first time, or you're visiting us and maybe you've just seen it a couple of times, like in a live room or something like that. We are connected to well, first of all, most of you know, all of you probably know that we trade the futures markets intraday. So it's based on short-term volatility. We're flat by the close of the market, so we're out. We don't carry overnight positions. The main instruments we trade in the live room are ES, the E-mini S&P, $50 a point, $12.50 a tick. All the equities, of course, are on the March contract, which in a couple of 3 weeks or so, we're going to roll to the June contract. The other thing we trade in the room, of course, is crude oil. That's Gary's favorite. Most of you know that. Pretty good at trading it. Makes money pretty much every day on it. ES, gold. We trade gold in the room. Sometimes we get movement, sometimes we don't. We trade the Russell, RTY. We used to trade YM, we don't anymore. I'm connected to a data feed to our broker, NinjaTrader, which of course is the platform that the scripts are written on. And if we didn't have any Viper scripts on here, you would just see, more or less gray bars kind of going up and down. It'd be very difficult to see where to take trades, where to get in, where you should be long, where you should be looking at shorts, where you're looking for reversals, trends, all those kinds of things. So when you install Viper scripts, what you get is the background colors, and we'll discuss those in a minute. Bar colors, blue, yellow, and red. The swing levels here, you see the dots punctuated where the market does a swing. Swing is simply where a market goes up or down, hits a level, and then pulls back from it. Power meters are the short and long-term trends. And then the predictors, of course, are the swing levels and painted in real time. Most prominent thing on here you can see is the bands. The large line in the middle is called the mid band, and there are 4 bands below it, 4 bands above it. We'll get into how to trade that in a little bit after we go through discussing support and resistance first. Well, then we'll get into trading it. So let's just start with some basic concepts here. Let me continue to orient you a little bit as to what you're looking at here. Okay, so today is Thursday the 28th. I can't believe tomorrow's March 1st. That's just unbelievable, but it is. Excuse me. Let me take a quick sip of tea here. Sorry about that. I'm trying to get over a little cough and cold I've had for about a week now. Anyway, so yeah, I'm in California, so this is all Pacific time here. Right now it's a little bit after 5. And so 2 days of ES movement is encapsulated in between these lines right here. Here was today, and here was yesterday. Now, for today, let's start with a quick exercise. We can work together a little bit on this, and then we'll start to get a little more advanced. And I'll save the really advanced stuff for Saturday morning, the part 2. We'll just get the basics done here and how to trade it. So you have something to work with for tomorrow, and then we really be able to kick it into speed next week. Now, for today, if yeah, I see what you're saying there, Brian. If you were going to draw support and resistance lines on ES for today, where would you put them? For those of you that are somewhat kind of new to trading, support is an area where a market comes down to and bounces. That's called support. Go ahead and just we'll give you like 15 seconds. Type in where would you put support and resistance lines on ES for today? Resistance is a level, of course, where the market comes up and it hits it and then it pulls back from it. So you can go ahead and type those levels in. Support and resistance for today. Today is right here. Today was Thursday the 28th, so that was today. Where was resistance and where was support? All you got to do is type in 2 numbers. You can leave the 27 off. Just put in the last 2 numbers. I see some numbers coming in. Support and resistance. This is the first little sort of pop quiz. We do these. We punctuate these throughout the webinar. I personally, most of you know me, I like to make the webinars as interactive as possible. I think people pick things up quicker that way when you participate in what you're looking at, as opposed to being barked at for an hour. I'll give you 10 more seconds. Where is support and where is resistance for today's trading? To the right of this line right here. This was midnight Pacific here. 6:30 is the open of the U.S. markets. That would have been right about in here somewhere. And then, of course, this was yesterday. This was all day yesterday. Support and resistance. Where would you put the lines? Donde está el líneos? Where are the lines? All right, I'll give you 5 more seconds. Got a ton of numbers coming in. Those are looking super good. Super good. I think you're getting it. I see Louis got them in. Kathy, Donald, Jim B, Brian, Philip. Jim, those numbers look good. John, Demetrius, welcome. Jack, that looks good. NB, Mindy, hey Mindy, how's it going? Those numbers looking pretty good. All right, time's up. So there seems to be some confusion about, and I'm going to try to clear this up as quickly and simply as I can, where I've noticed that yeah, John, we were looking at today's numbers. John B, no problem. So let's cover very quickly sort of what the concept of support and resistance is, and not to overcomplicate it, but make it really simple for you to figure it out. So you're going to notice that, and we talked about today. We're not looking at yesterday, so we're not looking over here. You can see. Let's look at the swings at the top and look at resistance first. You got a swing there. You got a swing there. And you got a swing here, and then you got another swing right here. So what you want to do is you want to take a line that represents the preponderance, or sort of the average where you see resistance be. And I would put the line right about in here. So in this case, you can see we have, so that's coming in right around 92 3/4. You could call it 93 if you want an even number, plus or minus a tick or two, somewhere in here, anywhere in here. If you said anywhere, I'd say from 92.50 to 93, anywhere in that area, you got it right. So what you're going to say is, well, Charles, this one came close. This hit it. This went above it and this went below it. Well, you're never going to get a perfect line that hits all of the swings. It's going to be pretty rare. It happens occasionally. But when you're looking at support and resistance, you want to just quickly assess where the preponderance of candles are coming, where they're hitting, and where they're pulling back. That's resistance, okay? So anywhere in here, you got it right. Now, support is a little tougher. Right at midnight Pacific, you had a swing way down here, close to 82. You had a whole series of swings kind of in here. This is in the trading session we got this. I remember in the room. I was getting short in here and just getting all chopped up. And then you got another one sort of in between. So on the resistance side, I would come in at I would put the line more or less right in here. Right about in there. Anywhere right around 84. If you were in a tick or two of 84, you were pretty close to where I would put the support line for that. Now, here again, you're going to find that some swings, I would consider this almost an outlier. This was at midnight and not really particularly relevant to the trading day. And these are more, I think within the realm of support and resistance for the day. Now, this is clearly a range. It's been in a range all day. How large is the range? Let's take a look. I know from past webinars where I ask this question, I say, how many of you like ranges? And almost everybody says most people despise ranges. So 84 to 93 is 9 points times 4 ticks per point is 36 ticks. So based on our minimum criteria for trading ranges, is this range tradable? 9 points or 36 ticks from top to bottom. Is that a tradable range, yes or no? For ES for today. Yeah, most of you, if you're brand new or you're visiting or on a free trial, you might not know the answer, so that's cool. 20 to 25 ticks is our minimum criteria for trading a range. And let me ask a supplementary question, and this is just a single quick answer from you. Now, if you were going to trade this range today, now hindsight's 20/20. Granted, we're armchair quarterbacking at 5 o'clock at night. I mean, it's easy to do. It's hard to do when it's happening. Although you could have put these lines in right here, even in the pre-market session, and known ahead of time where support and resistance. Even if you didn't know that, you could have put them in here at 6:30 or 7 o'clock. So this range was pretty well defined early in the morning, I would submit to you. Now. The last thing I want to say before moving on the concept of support and resistance, and this is just something to sort of tuck in the back of your cranium, is that support, we put a line on a chart. Gary puts lots of lines on the chart in the live room. You've seen that. Simply because we need a number to refer to. So we would say support on ES is down around 84. And you can clearly see resistance up in that area of 93. Now, the reason we say an area is for the reason that I showed here earlier. Swings come up to it, swings come below it, swings come above it. And so it's healthy to think of support and resistance as areas. Areas, not a specific number. When you put a line, you get a number, yes. But it technically is an area. Now, if in hindsight, if you were going to trade this range, would your primary mode of entry be to buy and get long from the bottom? That would be a B, would be your answer. Or no, L. Let's use L for long. L for long. Would you be shorting the top of the range? S as your primary mode of entry. S for short. So you'd be shorting, covering at the bottom. Shorting, covering at the bottom, et cetera, et cetera. Repeat. Or B for both. You could short the top, get out of your long, flip and reverse, buy down here, buy to cover, buy support. So L for long, your primary mode of entry is longs only. S for short, your primary mode of entry is shorting the top of the range. That's an S answer. B would be you trade both sides. Buying support, buying support, buying support, taking profits at the top, taking profits at the top, rolling over and getting short. Short, 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 long, 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 long down here. So that would be a B. Put 10 seconds on the clock. Just hit a letter. Boop. Just go ahead. Not going to hurt. What would you do? Would you be shorting it? Getting long at the bottom? Is there any other factors we should consider when we look at doing this, trading a range like this? We already answered 36 ticks, so it's large enough, right? All right, 5 seconds. Movement was very slow at 6:30. Yeah, in fact, in the whole room, I'll show that in a second. NB, the market hardly moved at all. Well, you know, I suppose another. Some of you might say, I don't want to trade it at all. That's okay. That's fair. All right, time's up. So let's talk about this for a second. First of all, I want to talk about if you are a trend trader. In other words, you like to trade, getting long on uptrends, right? And you get short on downtrends. And you love trends. You can see trends. You make money in trends. I get it. So when you trade ranges, it's almost like a complete reversal process because your mind says, I want to get in on a break and a run, right? Instead, you got to do the opposite. Your brain, excuse me, when the market's going up here, most people are not thinking, I'm going to short this. You're thinking, boop up, boop back, and let's get long and off we go, yes? Likewise, when a market's coming down here and it's red, so the hallmarks of a range-bound market are as follows. First of all, you can see the background colors look like a striped shirt. That's obvious, right? Second thing, you're going to notice that you're going to get a lot of yellow bars interspersed around the midband here. The midband itself is going to be flat or hardly moving at all. And as you see right here, the support and resistance are all pretty tightly correlated. Now, I would say that this is large enough to trade both sides. Yeah, you could definitely trade both sides of this. So how you do that is there's a couple of ways. You want to get in, you want to fade the top, and you want to fade the bottom. So what fading means is that when a market comes up to a resistance area and you want to short it, you're going to have to get in on a kiss and roll down. So you're never going to get well, you could possibly if you put a limit order there and it bipped it right on the button, but that's pretty rare. Normally, you're going to wind up fading at the top and the bottom by at least 5 or 6 ticks. That's true of almost any range, right? That's true of almost any range. So that means you're actually getting in here. Your orders are getting filled down in here. You're not getting in here. Okay, that's how that works. And when you're going to get into, buying a bottom, you come up 5, 6 ticks off that support level, and so your buys are in here. Buy to cover on your shorts. Buy to cover on your shorts, getting long possibly in here. See how that, let's just get real quick, let's get real detailed about this here. All right, so this is 84-ish. And this line right here where you're actually getting filled is 85 1/4. That's 5 ticks. Can you see the difference? Can you see if you're going to trade a range how you got to fade it? That's what that means. Fading means you're going to go, 4, 5, 6 ticks above or below where the entry actually is, where the swing level actually is located. So this is at 93, and this line for entry is at 91 3/4. So that's 5 ticks. Right? Okay. Good deal. All right. Now, final question before we leave this range and move on. Final question on this. In a range like this, is it a good idea to take mid-band box trades? Is it a good idea to take mid-band box? This is a yes or no question. 10 seconds on the clock. Yes or no question. Just type in a Y or an N, whatever you cast your vote. boop, Y, boop, N. Y for yes, N for no. Mid-band boxes. Are those a good idea in a range like this? Is that something you should, our normal go-to trade, which is a mid-band region box? Yes or no? Yes, you would trade them. No, you would not trade them. 5 seconds. Yes or no? Question. Mid-band boxes in a range. What say you, team? All right, time's up. No. Yeah, there's not enough meat on the bone. Hey, Walter, I didn't see you sneak in the back door there. Welcome, buddy. Yeah. So here's most of you know, of course, how mid-band boxes work. You get in, you draw the region using the Object Trader tool, and wherever you have it drawn, you're filled on the close of the bar outside of it. So let's say hypothetically you just drew the box like this, and you're filled long on one of these two candles right here. Right here, either that one or that one, depending on when you drew it and where exactly you drew it. And so your whole trade would be this right here, from here to here. So by the time you put in account for slippage and commission, there's just no meat on the bone here. It's even worse on the short side. Let's extend this box. By the time you're filled in here and you're getting out here, there's just literally no ticks on the bone there. There's just no ticks on the bone. Slippage and commission, the only person making money on those trades is your broker. You're making a commission on all that movement, right? So it's a complete reversal. You know, when we look for pullbacks to mid-bands on trends, we love the mid-band box and it works, right? In ranges, that's not normally the case. Even in a large range like this, 36 ticks, it's even worse if this thing was tighter. If this thing was only 20 or 25 ticks, there would literally be almost literally no meat on the bone to trade the mid-band at all. Okay, any questions on this final setup on the range for support and resistance? I'm going to completely erase this, clean this chart off, and we're going to move on to other setups. Excuse me. Any other questions on this? Okay, let me clean the chart off. Checking audio. Checking audio. Testing audio. 1, 2, 3. Testing audio. 1, 2, 3. You can hear now? Did I lose the audio connection or something there? Huh? For a while? Okay. All right. I'm sorry about that. I'm back. I was asking how many of you trade crude oil. That explains why nobody was answering the question. Crude oil traders. Show of hands. How many of you love the crude? The crude, CL. $10 a tick. $10 a tick. April contract. Ooh, a lot of your crude traders. Good. Crude's a good little runner. I'm telling you. If you get your head around crude and get in at the right spots and manage your trades like Gary does every day. I used to not really trade oil that much. I've kind of come back to it. I traded it a while ago, you know, maybe 6 months, a year when it was really rocking and rolling with all the equities. Remember how it was tied to the equities? Equities went up, oil was going up. Oil flip, equities sell off. For a long time. This is probably a couple of years ago. But now we're getting some good movement again. I think it's all the tension, and it's always been tension. OPEC, Middle East. So let's talk about crude a little bit. And if you don't trade crude currently, it could be an instrument that you might want to go take a look at. Now, when you're here, let's get some orientation on here, so we all get on the same page here. So, all right, so here's midnight Pacific on crude. End of the Asian session coming up here to the left. European session starting on the right. Just so everybody gets all on the same page here. 6 a.m. is the crude pit open, so Gary's opening the room up right around here, 5:55. Crude pit open here. Now, what is all this pop quiz? Make sure you're awake. Look at all these bars coming in here. From here to here. This is 1 minute of data. What the heck was this? Let's see, that was yesterday at 7:30. You crudy traders, what was that? What is that? There got to be 100 bars in here, and 7:30, 7:31 is all the way over here. What the heck? What the heck? Oil inventory, good. You crudy traders got it good there. That's right. So you can see why we want to be out on crude. This is one of the most important things you got to know. You got to know when the inventory number is coming in, and we help you in the room with that. Excuse me. Most combines, well, it's just good. I mean, even for your own, if you have your own account, you're not in a combine or whatever. All right. Let me ask you another pop quiz, all you crudy traders and you aspiring crudy traders. It's going to be a quick question. I'm going to start firing more stuff at you. You got to be ready to pick it up, okay? After the inventory number came out, how many, and I'm going to help you out here, how many long trades were there? I'm not including the noise, so exclude the box. After inventory was released and the shotgun occurred and the news bots took over, everybody knows what a news bot is, right? What's a news bot? You know, Charles, I hear you saying news bots all the time. What are you talking about? Is that some kind of robot from outer space, or what is that? News bots. It's kind of a separate question. The main question you have 10 seconds on is how many long trades set up on crude after this shotgun box? Counting long trades. Okay, while you're typing those numbers in, when you're in 10-second time frame thing, news bots are electronic digital readers. So they get access to Bloomberg and the news, the news is released. And what they do is they go in and they parse the news. So for instance, why did it shotgun up? Well, you were predicting a drawdown of I believe it was 2.8 million barrels or 2.9 or something like that. And they got a build of like 8.6 or something, just completely in the other direction. So the news bots glom onto that. And then normally they parse it, and then the buy programs kick in and they start to run it up, or the sell programs kick in and they start to run it all the way down. It happens every time. Yeah, you've got to wait at least 1 or 2 minutes to get into a trade after, not only for your own protection of your capital and your safety of your account, but most trading combines aren't going to let you trade that first minute or two after inventory. All right, so let's blow this chart up. Time is up. Okay, we're looking for long trades. Those of you that are new, it's okay if you're not really understanding where to see them. So you can see that after news, we went into a very pronounced uptrending type move, right? Market came up, hit resistance, pops up, gets a series of higher lows. We start to pop up into an uptrend. So that's why I helped you out. I said, we're only looking for longs, right? Only looking for longs. Pop up, pull back, pop up, pull back. The first long trade you probably noticed, was right here. This is what we call a mid-band trade. This is what we call a mid-band trade. So let me talk about the long side and how we do this here, okay? When you hear the term mid-band trade, what that means is that the bars, the price action, has come down into these two bands right here. If the bars are within these two bands and or directly on the mid-band, as you see over here to the right, that was long number 2 for a mid-band trade long. Okay? Everybody see that? So there's 2 mid-band trades. See how the bars have come into the bands directly above and below? Now in an uptrend, when you're trending up, the characteristics, of course, are that you have, the mid-band and all the bands are stair-stepping up, right? Bars are predominantly blue. You have the green stealth long, green stealth long. That's the green sneaky snake line right here, right? And so the way we roll, since we are pullback retracement traders, is we get a thrust in the direction of the trend, of course, which is up. And then the retracement part is where our trade opportunity is located. Those are called mid-band trades. So when you hear them in the room, that's what that is. That was a shotgun in inventory, Kathy, on yesterday. See all the bars? Yeah, that's what that 730 was. All right. Now, in an uptrend, we have another trade that's called what's called minimum criteria trade. And that is as follows. In order to qualify for a minimum criteria trade, I'm going to show you an example of one right here. Can you see how the bars have come below the stealth line? The stealth line has been broken. The green sneaky snake line has been broken. And it closes below line 6, the thin green line located at the top of band 6. So in uptrends, the minimum criteria trade is met when it comes into that band right there. So this would have been, technically, if you're counting from the left, 1, 2. Of course, that's 3 over there, and we'll see if there's any more. Now, based on the criteria, I'm going to do a quick yes or no question with 10 seconds on the clock. Now that you know what you know, you're all educated and all the smart manner of entry on long trades. Is this a legitimate long trade minimum criteria, yes or no? That 4th box. Type in a Y or an N. Boop. 10 seconds on the clock. Now just 2 minutes, just a minute ago, I told you the criteria, right? So it either meets it or it doesn't. 9 seconds. Just a yes or a no. Doop, doop, doop. Y or an N. Either it meets it or it doesn't, right? Counting long trades on crude after inventory from yesterday morning. Based on our criteria definition, 4 seconds left. Type in your answer. Does that meet the minimum criteria? Yes or no? 3 seconds. All right, time's up. Yes. Yes, absolutely it does. Are you in band? Are you underneath stealth? Yes. Are you underneath line 6? Yes. Are you in this band when you have bars closing in here? Yes. Minimum criteria met. Check mark 1 and 2. Yes. The answer was yes. You are correct. Now that you've seen an uptrend, let's do this. Let's go look for a downtrend, because you handle a downtrend a little bit very similar, but the minimum criteria is going to be a little bit different because it involves line 2. Now, I'll tell you what's going to be really hard to do is find a downtrend, because oil has been going up, 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 up for what, like 2 weeks. Lordy, Lord, help me. Hold on. Wait, I found one. Here, I got a couple of them. All right. Okay, I'm going to do a similar exercise, and I'm going to do it like this. All right, I'm going to really blow this downtrend up. And before I even explain the criteria on the downtrend, most of you already know it. That's why I'm going to go ahead and ask the question. When I show you this chart right here on crude, how many short trades are on this chart? looking for short trade entries on crude from here to here. This would have been the early pre-market session in the U.S. 6 o'clock pit open was just to the right over here. So this would have been sort of the tail end of the European session. Tail end of the European session. Counting short trades on this chart. Some of you don't know the criteria. That's okay. We're going to explain it in just a second. So if you don't know, it's cool. Don't worry about it. If you don't know, it's totally cool. We'll show you. If you do know, go ahead and type a number in. You got 6 seconds left. Counting short trades on crude. I'm not sure exactly what morning this was. This might have been Monday or Tuesday. I know I had to go back a few days because last few days it's been a huge uptrend. 4 seconds. Just go ahead and count them. Type in a number. Can't mess it up. You're going to see some of them. You're going to see all of them. Sometimes it's hard to see them. That's why we do these, right? 2 seconds. Go ahead, type in your number. Voting on short trades. Mindy, Donald, that looks good. David, Jack, Lewis, Kathy, that looks good. Got a lot of numbers coming in here. Rick, Byron, Walter, that looks real good. Brian. Hey, Maurizio, ciao bello, my friend. I didn't see you come in there. Jim, Vitali, Toby, Michael, excellent, excellent. Okay, time's up. Now, here's the thing. And this can be sort of a fun and frustrating thing at the same time when you're looking to take trades. You know, you couldn't, let me explain it this way to the left. At the time that this happened, overnight, this is in the middle of the night here, like 3:45 in the morning, would you have boxed this in to be able to catch the first leg down? I mean, arguably the first leg down in this downtrend was this big thrust right here. And that was huge. I mean, let's put this in perspective. It went from 20, all the way down here. That's 60 ticks. This is a 60 tick drop. At $10 a tick, that's 600 bones. That's 6 bones a contract. This first leg. Now, we're counting shorts, yes? Let's blow this up. Now, if you remember in the long minimum criteria entry, we looked for retracements that came into the mid-band area, which is the mid-band itself, and then the minimum criteria, of course, was under band in band 6, like we discussed. That's for longs, yes? Now, for retracements on the short side, you have a very similar condition. The mid-band, in fact, is actually exactly the same. It's the exact same bands, right? Got to be on the mid-band or within here. Now, the minimum criteria for short entry on crude is above the red stealth and closing above line 2, which is the thin red line above band 2. So it's right there. So there's a minimum criteria short, first short trade on crude. Okay, now knowing what you know, coming over here, does this qualify as short entry number 2? Yes or no? These candles right here. You know the criteria. I just said it 2 seconds ago, right here. Does this meet it, yes or no? What do you think? They look a little different, but is the criteria technically met? Yeah, I'll help you out here. He's got to close. He's got to retrace above the stealth, the red sneaky snake line, and line 2, the thin red line, up into band 2 for short entry. Is this meet the criteria, yes or no? 2 more seconds. Yes. Good. Is there another one here, Michael? I suppose you could say so. Yeah, I guess that does meet the criteria. Yes, yes. I would almost. This is so close to this one. I would almost consider this sort of a quasi, like an ABC pattern here. You got A, B, C. This is so close to this one. I'd almost sort of lump that one in with this one. Call that really really. All right, good. So far on the chart, counting from the left, we've got 1, 2 short trade entries. Good. I think everybody's getting that. Now, question over here to the right. Is this a legitimate short trade entry right here? Yes or no? Should we include that in our count? Hold on. I'm going to take one more sip of tea. Stand by. Man, I think I'm just going to drink a bottle of Robitussin tonight, man. I got to try to nuke this thing down. It's been like a week. Coughing, sneezing. It's horrible. In the morning is terrible. All right, circling back. Is this third box a legitimate short entry? Yes or no? We'll give you 4, 5 more seconds. Okay, remember the criteria that we're looking for, right? 3 seconds. Cast your vote, yes or no, Y or N. That's all you got to type. Just hit the button. Doop. 2 seconds. Does it meet the criteria for a short entry? What say you, team? Weigh in. 1 second. Time's up. No. Okay, we said everybody should say no. Let me see if everybody said no. Yes, good. Good. Yeah, no, yeah, you didn't. Well, okay, criteria 1 was met. Did you close above the stealth line? Yes. Okay. Did you close above line 2? No. Now, did this turn out to be a good trade? Could you have taken this? Yes. These are only acceptable in conditions where you have such a precipitous sell-off. And if you take them, and you hear this in the room a lot, we'll say this, right? If you might hear a comment like this, and let me explain what this means. Excuse me. When boxes are located in a distance that's fairly far away from the midband, so you're pretty extended out here, right? And, you want to take the short. You want to take advantage of this powerful trend that you missed. Maybe you missed all these entries. You're like, dang, this thing's running away from me. Well, then what you do is you put an extremely tight stop in case it does one of these things here. So your stop literally would be like right here, like a tick above here. Okay. So let's define the risk return here and discuss how this played out if you're faced with this in the future. Well, depending on how you drew the box, you'd either be filled here at 31 or possibly the close of this one at 25. One of these two bars you'd be getting in, right? And your stop is right here at 39. So if you're filled at 31, this is only 8 ticks. It doesn't meet, Lewis. It doesn't meet. It does not. This was a no. But I'm explaining if you're in a powerful trend and the thing is running. This happened on ES the other day, remember? Remember ES was sitting up there at line 6 and consolidating? Remember, it had already run up a little bit. I don't know if you remember that. What day was that? And we took that trade, remember? I took it. I remember that trade. It was just hovering right there. Remember, it was up here. It was hovering around right at the open. And we said if you take the pop, just put your stop right under here. Some of you remember that, right? Yeah. So, it doesn't technically meet it, but you can take it if it's a powerful trend. That's all I'm trying to say. And the way you handle that is if for some, what you say when it goes against you is for some reason you get like a quick bip down and like in a run, and you get even if you get a scalp off, like an 8-6 or 8-tick scalp, take your initial stop and get it down real tight to your entry in case the thing goes haywire like this here. And there was no, but that's of course not what happened here. Walter, can you hear me? Everybody hear me okay? You might need to log out and back in, Walter. Yeah, if it's scratching up real bad, you might just have to just go pop out and come right back in there. Everybody else is saying the audio is good. Okay? All right. Good. Okay, well, let's finish this exercise, then we need to move on. All right, so how many do we have here now? We got 1, we got 2, we got a big no, negatory. We explained if you took it, how you handle it, yes? And then come back over here. Are these mid-band trades right here? You've got 1. You've got 2. And is this one a 3? No. This wasn't a 3. This was not a 3. Because you came and you broke up and then you started to actually head up over here. All right. Counting short trades. from the left to the right, you had legitimate trades. 1, 2, minimum criteria met. 3, 4, mid-band trades. 3, 4, mid-band trades. So if you said 4, you were correct. All right, good. Perfect. Now what I'm going to do is going to give you some tougher stuff and get you ready for Saturday morning. You know, markets aren't always really nice to you like this, where they just drop 200 ticks and give you a bunch of chances to make a ton of money. It's not always like that, right? So let's look at some tougher areas and see how you would handle those. All right, I'm going to do a different exercise. I'm going to advance a chart on crude. I'm done with that explanation there, Jack. I got to move on. I'm running out of time. I got like less than 10 minutes here. I'm sorry. My apologies. We need to. A couple other real important things I want to try to cover real quick. If we have time later, I'll circle back to the question. 511, 513. Let's see, where is he talking about? Yeah, they came up into line 2. Yeah, you can make the case. Yeah, I see the bars that came up into line 2. Yeah, I mean, you know, it's kind of on the cusp, and it didn't really work out at that area. Okay, 511, Jack. In fact, I can show that just before I start the exercise. In fact, let's do that. Yeah, hold on. Let me circle back and answer Jack's question real quick. He's asking about right here. He's asking about this area right here. Jack's question, it's right on the chart, so we can answer it real quick here. He's saying, was this a legitimate minimum criteria? And I would say yes, it does meet the criteria. Yes. Yeah, to answer your question, that's a good point there, Jack. Would you have been filled short? It's hard to say. The wicks of these candles may or may not have gotten you in. But you did close above stealth. Yes, check mark 1. And you closed above line 2. Check mark box 2. Now, you know, you didn't get filled here. Obviously, it came up in the mid-band, and your short entry would have been up here. Same with this one. Okay? Okay, good. All right, so here's this exercise. I'm going to advance this chart in real time, and I'm going to help you. I'm going to give you a little hint. There is a trend change that comes along on this chart when I advance it. So right now, the background is green. We are stair-stepping up. You are looking to take longs in here, yes? Now, at some point, I'm just going to tell you it's going to happen. You're going to want to flip and start taking shorts. Now, when you think you see the market trend has changed from up to down, and you would start taking shorts, you simply type in an S. Okay? Okay, so here we're all watching the chart. This is whatever day this was. Crude pit open right here. 6 o'clock. Gary opened the room right over here, so you're watching it. Came up. Maybe you caught some longs. It's hard to say. I don't know exactly what day this is, but here we go. Ready? When you think you're going to start taking shorts, you simply type in an S. Here we go. Okay, we're advancing the chart. 7:15 a.m. 7:18. 7:21. Remember, if you think you're going to start shorting it, you type in an S. There's 7:22. 7:24. 7:26. 7:28. You're coming up on 7:30. There was no inventory on this particular day, so you can trade right through 7:30. 7:31. 7:32. Let's get the bars even bigger right there for you. 7:34. Continuing on in the morning here. 7:35. 7:36. So actually, I'm doing, you know, these are 2 to 3 minute increments, and I'm doing them like 10 seconds. So, you know, this is probably like 30 times what it really would have been to watch in real time. 740. Okay, I'm gonna 745. 750. All right. I'm going to stop it right there. How did you do? Recreating real time in this particular morning. How did you do? Did you catch it? Did you catch them? Is there more than one? Was there more than one? David said I didn't do too good. All right, let's step through this together, okay? Let's step through this together, all right? Now, I'm going to start right here. This is a common area where when transitions start to occur between trends from up to down, that gets a little squishy. Okay. No, we weren't counting. Yeah, we were counting shorts, and I want to address it right now. Right here. Excuse me. Oh man, hold on one second. All right. Okay, so let's look at this area right here, right at 720, 721. And I would like to address it this way. So here we get a bounce. Everybody can see this was a mid-band long trade, okay? So then what happens is, and this is where people start to get a lot confused, but don't worry about it. We're going to clear it all up. Now look what happens here. We thrust below this swing. We come all the way just to shy of band number 2 here. However, what confuses people, and I understand it, I hear this all the time, but Charles, the bars turn red. The bars turn red. I'm thinking short. Some of you actually typed in S's when these bars were forming right here and these bars were forming right here. Now notice the background is still green. Let's go recreate that real quick. Let's recreate that real quick. Looking at it now, not knowing what you know, is this a legitimate short, yes or no? This box right here. Knowing what you know now, should you still have been getting, what do we call this in a trend when it goes all the way to the outermost band? What do we call that? What is this? Background still green. Now, arguably, and I understand your point, you could say, well, look at this, Charles. You're getting a series of lower highs and lower lows, and you're kind of going almost kind of like I'm doing a little bit of a downtrending channel there, right? Technically, from the way we teach this, from a technical point of view, that is a deep retracement. Deep bar probe, deep retracement. When you go below the mid-band, out into the, just above line 2, and there was actually, you can make a point going back to our support and resistance levels, that you could make a point that there was a support level down in here somewhere, right? Could have had a line on your chart and anticipated a bounce. Now, it didn't give you much. You maybe got a scalp out of it, but that's not the point. How much money you made and where you stopped out isn't the point. The point is that this was not a short entry. And this was not a short entry. At the time this formed, when those bars formed, it still had a green background. You would have been stopping out of your long trade. Okay? So this was not a legit entry. No. Now, some of you typed in an S when this happened right here. Let me blow this up. And I want to be really clear so you can break this habit. Some S's came in when you saw those bars go down like that. Now, looking back on it, hindsight's 20/20, is that a proper short entry? Here. Of course, we know what happened. Okay, just suspend disbelief if you can. What is wrong with entering in that circle right there, short? There's many things wrong with it. Never enter on a thrust. That's right, Jack. Circles are bad, Jim. Jim's a comedian. Yeah, circles are bad. Okay, just remember this. Here's the simplest way to remember it. And if you can do this, it's going to save you a ton of money on stop outs. It's going to help you see trades a lot better. Excuse me. Get this light off here. Now, we said in the beginning that we are retracement traders. How far away is this circle from the midband? 20 ticks? Even a minimum criteria trade, which is way up in here, and a midband trade, which is located way up in here, are you anywhere near those two areas with these bars right here? Now, psychologically, I know why you want to pull the trigger. Because in the thrust move, you become convinced it's going to tank, and you want to pull the trigger right there, right? And you get filled, who knows, market order, Gazonga, you're short. I'll be right there, right before it hits bottom, and then it starts to do this. Run against you. Man, you know what? Every time I get in, the market goes against me. Why does that happen? Why do I feel heat on every single trade? Yeah, you're nowhere near the midband. You should always keep in mind your relationship of the swing or the bars in relation to the midband or minimum criteria. If you're nowhere near it and you're in the thrusting part of the move, which is down right here, you absolutely got to sit on your hands and not take that trade, okay? Because you're going to stop out. I'm telling you, most times you're going to stop out with a full stop out. And the kick in the pants, if you had a 10, 12, 15 tick stop, got you in here, sure enough, what happens 2 minutes later, it comes right to the midband, and you're licking your wounds on your full stop out here. And I'll be darned, there's a midband trade where you should be getting in, right? This is really critical. What I'm showing you right here, when it comes to a trend change and you're looking at entries, that you got to fight that temptation to take that first thrust and pull the trigger, because if you get in down here at the bottom, it's going to come get you. And it's going to double whammy you because it's going to come right to where it rolls over, and sure enough, there was a short trade right there. So that was trade number 1. You should have typed in an S when these bars formed right here. That was the appropriate time to type the S in to take the short trade. Everybody see that? Now let me advance it. Now, is this another appropriate area? Some S's came in here. Now looking back on it, was that an appropriate place to put an S? I know what happens. I understand it. Look, I'm human. I'm not a robot. I trade too, right? What happens is you see the trade was up here. You're too late, and now you want to get in. You can't do that. You just got to. If you're doing that and you're stopping out, you just can't do that. Now, what happens here is some of you typed in an S over here, and that was good. Does this meet minimum criteria for short entry on a retracement? Yes or no? 1, 2, 3, 4 bars. Is that another entry right there? Some S's came in right here. A lot of S's came in here. A lot of S's came in here. Yes. That meets. Are you above Stell? Yes. You above line 2? Yes. Arguably, you're wicking up into the mid band right under the mid band. It's borderline minimum criteria, almost mid band trade. A little bit higher than would have hit up in here where this one got in. The 2 S's were here. Yeah. 1, 2. Yeah, if you miss this one, that's okay. Don't worry about it. Markets normally give you at least some kind of retracement to get in. I think that's where the panic comes in. Excuse me. The whole FOMO thing, fear of missing out, right? FOMO gets everybody. Well, not everybody. It gets a lot of traders. FOMO, fear of missing out. All right, that's it. I've got to stop.